Good evening, good evening. How are you doing today? Sure you had a great day. If you can hear me, please drop a comment. Drop a comment if you can hear me. I want to see your comment. You're welcome to tonight's weekly market outlook session. You're welcome, you're welcome. Hope you ended last week in profit. And you're hoping that this week, this new week, will be better than last week. That's the way it should be. Can you hear me? Can you hear me? If you can hear me, drop a comment. This week shall be better than last week. That should be your mindset. That should be the mindset you should operate with. This week will be better than last week. Can you hear me? Can you hear me? Can you hear me? Okay, we're going straight to business. Okay, so let me delete all this, my drawings. Okay, you're welcome. So straight to business. If there's any pain you want us to analyze, drop it in the comment section. Okay, if there's any pain you want us to analyze together, drop it in the comment section. So we'll start with Australian dollar USD. Okay, so first thing we want to look at is the weekly time frame. We want to see the pattern that formed on the weekly time frame. That's the first step. Okay, so on the weekly time frame, what can we see on the weekly time frame? We can see that price tested a previous resistance level, right? Can you see that? And there's a rejection from that level. Okay, we had a support here also, which became a resistance. So you could call this a supply zone. Okay, you could call this your supply zone. So price tested this supply zone and there was a strong rejection from that zone on the weekly time frame. Okay, so the next thing we need to do is go down to the daily time frame. Now, before we go down to daily time frame, we should identify areas of liquidity on the weekly time frame. Okay, before we go down to the daily time frame, we want to identify the areas of liquidity on the weekly time frame. So where do we have liquidity on the daily time frame? We have liquidity at this low, and also we have liquidity at this high. So price is either going to aim for the buy side liquidity or sell side liquidity. Now, based on the pattern we have on the weekly time frame, we can tell that the long-term trend is bullish, right? Based on the pattern we have on the weekly time frame, we can tell that the long-term trend is bullish. Good evening, Mr. Odogu. Okay, so from this point, this is where we should have entered buy on AUD USD. After the close of this hammer, that would have been the best entry for Australian dollar USD. Okay, after the formation of this hammer. And if you had bought Australian dollar USD from this price, your stop loss would have been at the low of this candlestick. So right now you will be in profit. If you had missed entering a buy after the formation of this hammer, the second opportunity would have been after this pullback on the weekly time frame. This pullback here, okay, that would have been the next opportunity to buy Australian dollar USD. Okay, so since you didn't buy Australian dollar USD at this point and at this point, and price is currently trading at this level, it will not be wise to buy. It will not be wise to buy Australian dollar USD. Okay, if you had not entered buy at this point or this point, you shouldn't be buying Australian dollar USD at the current market price, because the risk you will be taking will be very high. So like I said, on the weekly time frame, you can see price tested a resistance level, okay, a supply zone, and there was a rejection from that level. Now we're going to move down to the next lower time frame, which is the daily time frame. Now, what are we going to look out for on the daily time frame? We are going to the daily time frame to identify a bearish reversal pattern on the daily time frame. If we go down to the daily time frame and we can find a shooting star, we can find doji, we can find spinning top, we can find hanging man, we can find a bearish engulfing pattern on the daily time frame. That tells us that the supply is increasing. That tells us that we have more sellers in the market and we should be looking for sell opportunity this coming week. Remember I said the long-term trend is bullish, okay? But this week, there's a high probability that price will pull back to a discount zone. There's a high probability that price will pull back to a discount zone. So you should consider buying at a discount zone. At the moment, price is at a premium level. So let's go down to daily to see the pattern we have on the daily time frame. Let's go to daily. So you can see the pattern we have on the daily. Can you see the pattern we have on the daily? What pattern is this? This is a shooting star, a bullish shooting star. Now, after the formation of a bullish shooting star, you are not expected to jump in and start selling because the body of the shooting star is bullish. If the body was bearish, you could go in and start selling. But because the body is bullish, you have to wait for the next candle to close bearish before you sell. I hope you get that. Because the body of the shooting star is bullish, we cannot jump in and start selling. We need more confirmation. So we would have to wait for the next candlestick, which will be Monday candle, to close before selling. Now, if we don't want to wait for Monday candle to close before we sell on Tuesday, what we need to do is go down to 4-hour time frame. Are you with me? We need to now go down to 4-hour time frame. Now, before we go down to the 4-hour time frame, I want us to apply our Fibonacci tool. Now, what do we use the Fibonacci tool for? We use it to identify premium level and discount levels. That is what we use the Fibonacci tool for. So let's apply the Fibonacci tool on the daily time frame. So we're going to take it from the swing low. Okay. So we're going to take it from, this is the most recent swing low on the daily time frame. This is the most recent swing low and swing high. Okay. This is the most recent swing low, swing high. So price is above level 50. It's above level 50. That tells us that price is what? Is at premium. Price is expensive. AUD USD is overbought. That's what it means. Okay, it is overbought. So we should wait for price to pull back to oversold level, or you call it a discount level, before we buy. So we want to see price pull back to premium, which is below level 50. Premium level is below level 50. So we want to see price pull back to a discount level before we buy. So with the pattern we have on the daily time frame, it indicates that the buyers, the bulls, are becoming weaker and the sellers are showing up strong. So this coming week, there's a probability that price will pull back, and that pullback could occur on Monday and Tuesday. That is my expectation. The pullback is likely going to occur on Monday and Tuesday. And it is likely the pullback will occur only on Monday, because this week we have a lot of major news lined up from Tuesday. We are expecting several major news from the United States. And that would also determine where price will go. Are you with me? So after the formation of this shooting star on daily, the next thing we need to do is go down to, what's the next lower time frame? 4-hour time frame. If we're able to identify a bearish reversal pattern on 4-hour time frame, then we should consider selling Australian dollar USD on Monday or Tuesday. Okay, so let's go down to 4 hour. What formation do we have on 4 hour? You can see the pattern we have on 4 hour. This is a bearish pattern. This is a bearish reversal pattern. This is a spinning top. This is a spinning top, and the next candle has closed bearish. Can you see that? The next candle has closed what? Bearish. Now, it would have been confirmed that we have enough sellers in the market if this bearish candle had closed below this spinning top. You can see that this bearish candle didn't close below the low of this spinning top. You can see there is a resistance. A support level has formed at this level. So before we sell, we want to ensure that this support that was formed here must be broken. Okay, we want to ensure that a candle closes below that support before we sell Australian dollar USD. I hope you are following. That's my take on Australian dollar USD. Mr. Abraham, evening, you're welcome. Okay, so that's my take on Australian dollar USD. I'm considering selling Australian dollar USD on Monday, Tuesday. Okay, then Wednesday, Thursday, Friday, the pattern might change because of the fundamentals that will be released. Wednesday, Thursday, Friday, the pattern might change. Like I said, the long-term trend is bullish. It is bullish. So what we'll be trading on Monday, Tuesday, what I will be trading is pullback, which is counter trend. Okay, so I have to be very conservative. I have to ensure that as the market is moving in my direction, I'm in profit. I'm trailing my stops because I'm trading against the higher time frame trend. Now you could wait. If you're a trend trader, you could wait for price to pull back, look for a bullish reversal pattern to form before you execute a buy trade. Are you with me? So that's my take on Australian dollar USD. If you have any pair you want us to analyze together, please drop it in the comments section. Drop it in the comment section. If there's any pair you are considering trading this week, please drop it in the comment section so that we could look at it together. So that's my take on Australian dollar USD. Australian dollar USD, I'm looking for a sell between Monday, Tuesday. Actually, I'm looking for a sell. If I'm selling, I will be considering buying at a discount zone. Okay, so I will sell Australian dollar USD to the discount zone, then look for a bullish reversal pattern to form on at a discount level before I will buy Australian dollar USD. I hope that is clear. I hope that is clear. Okay, so let's move to the next pair. Next pair will be Euro USD. Euro USD is positively correlated with Australian dollar USD. So let's start with the weekly time frame. So can you see the pattern on the weekly time frame? Last week candle closed strongly bullish, right? It's closed strongly bullish. Now, if you look at the structure we have on the weekly time frame, this is a bullish structure. This is a bullish structure. You will agree with me, right? That this is a bullish structure. That tells you that the longer term trend is bullish. Okay, it is bullish. Now, that the longer term trend is bullish does not mean we would not see opportunity to sell on lower time frames like 4 hour daily time frame, 1 hour time frame, right? There will always be opportunity to sell. There will always be pullback on lower time frames. We can take advantage of those pullback that will take place or that will occur in the lower time frames, but you have to know when you're trading against the trend and when you are trading along with the trend. Know that. So now, what pattern do we have on Euro USD? Similar to what we saw on Australian dollar USD. First, you would notice that price tested this resistance level. Can you see that? Price tested this resistance level. You can see resistance at this point. Go back again, you will see it was a resistance. Go back again, you will see it was also a resistance. That tells you that that level is a key level. At the resistance level, a lot of traders will be willing to sell at a resistance level. A lot of traders will be willing to sell. Okay, and when we have traders who are willing to sell, more traders who are willing to sell than traders who are willing to buy, there's a high probability that price will drop. Okay, there's a high probability that price will drop. So since price hits this resistance level and there was a strong rejection from that level, before we execute a sell trade at that resistance level, we want to see a bearish reversal pattern form at that resistance level. When a bearish reversal pattern forms at a resistance level, there's a high probability that that resistance level will hold. It's going to play out. So you don't just execute a sell trade because price tested the resistance level. No. The pattern that forms at that resistance level would determine if that resistance level is going to hold price. So price has hit a resistance level. The next thing we need to confirm is the pattern that forms at that resistance level. Okay, so now we need to go down to lower time frames, daily, 4 hour, 1 hour time frame, to see the pattern that forms on those time frames. So let's move down to daily. So you can see the pattern that formed on the daily time frame. Can you see? The pattern that formed on the daily time frame is a spinning top, and the spinning top indicates change in trend from bullish to bearish. You can see that the preceding trend on the daily time frame was bullish before the formation of that spinning top. That tells us that the buyers, the bulls, are becoming exhausted and sellers are beginning to show up in the markets. Sellers are beginning to drag price with the buyers. Okay. Also on the daily time frame, you would also notice that we had a resistance here, and I think price also tested that resistance level. Can you see it? We had a resistance here. If you go back here also, it was a resistance. So price tested that resistance and there was a strong rejection from that level. You could call this zone your supply zone. You could call it your supply zone. Price just hits a supply zone, or you call it your resistance zone. Okay, then the pattern that formed there is a bearish reversal pattern. So this tells me that we should look for sell opportunity. Short-term sell, please. This is a pullback. The long-term trend is still bullish. This is a short-term trend. This is a pullback. Okay, so after the formation of this shooting star, spinning top on the daily time frame, we will now go down to 4 hour also. Now, when we go down to 4 hour time frame, we want to ensure that the pattern on the 4 hour time frame is also a bearish reversal pattern. The 4 hour time frame must align with the daily time frame. They must be in agreement. Okay, if we go down to 4 hour and what we see there is a bullish reversal pattern, we can't execute a sell trade. We can't take any trade if daily and 4 hour contradict each other. Okay, so let's go down to 4 hour. So what pattern do we have on 4 hour? What pattern do we have on 4 hour? Okay, so let's call this a spinning top. Okay, this is a spinning top, but we cannot execute a sell trade until the low of this spinning top is broken. A candle must close below the low of that spinning top before we sell. We cannot sell Euro USD at the current market price. Okay, we have to wait for a candle to close below the low of this spinning top before we sell. That is my take on Euro USD. Okay, that's my take on Euro USD, and we're going to sell Euro USD to discount level before we consider buying. We want to see price drop to a discount level before we buy Euro USD. So let's apply Fibonacci 2. Okay, we're going to take it from this swing low. Let's take it from this swing low to this swing high. So we want to see price pull back to discount, which is below level 50. Okay, so I will be considering buying Euro USD below level 50. So when price drops to a discount level, I would wait for a bullish reversal pattern to form at the discount level before I buy. I wouldn't just jump in and start buying because price has gotten to a discount zone. Like people who use pending orders. No, I don't use pending orders. My execution is instant execution, because I have to wait for the candlestick to form, to close, before I execute my trade. So before I buy Euro USD, a bullish reversal pattern must form at a discount level. I hope that is clear. Okay, we'll look at gold. We'll look at USD/JPY. Just be patient. We'll look at all of the major currency pairs. Yeah. Colin says, I have the same take with you on AU, and I see the opposite for EA. Yes, AU and EA are negatively correlated. AU and EA are negatively correlated. If you are considering buying Australian dollar USD, you should look for sell opportunity on EA. Okay, they are negatively correlated. So if you're trading AU and EA, before you execute a trade on AU, always check EA. I'm sharing a secret with you guys. If you're trading AU and EA, if you see a bullish pattern on AU and you see a bullish pattern on EA, there is a high probability that that setup will not play out. There's a high probability that that setup will not play out. But when you see a bullish pattern on AU and you see a bearish pattern on EA, there is a high probability that that pattern, that setup is going to play out. And you don't have to trade both. You can decide to just trade one. You don't have to trade both. You can just pick AU, EA, but you just ensure that the pattern you're seeing on both charts is the opposite. I hope that is clear. Okay, so that's my take on Euro USD. We're looking for sell on Euro USD. Now let's look at USD JPY. Mr. Odogu says we should look at USD JPY. Okay, let's look at USD JPY. USD JPY. Let's look at USD JPY. USD JPY. Okay, the first thing we're going to look at is the weekly time frame. The pattern, the candlestick pattern on the weekly time frame would determine the direction for the week. The pattern or the structure on the weekly time frame would determine the pattern or would determine the trend for the week. So let's start with the weekly time frame. It is obvious, right? The pattern, this is a bearish pattern. This tells us that USD JPY is bearish. USD JPY is what? Bearish. And the best price to have entered Euro USD JPY, the best price to have sold USD JPY is this. Because we had a spinning top. You can see this was a spinning top. The next candle closed as an hanging man, which is a bearish hanging man. So this would have been the best price to execute a sell. And now the market is trading at the market closed at 147.01, 147.01, which is 200 and close to 300 pips. So the market is trading 300 pips below the price we ought to have entered USD JPY. So that just tells us that we cannot sell USD JPY at the current market price, because price have moved 300 pips from the point we ought to have entered a sell trade on USD JPY. So entering a sell trade at the current market price is at a very high risk. Okay, entering a sell at the current market price is at a very high risk. I cannot sell USD JPY. Though the long-term trend is bearish, I cannot execute a sell trade because the risk, the stop loss will be very high. The risk will be very high. So what do we do in this case? We have to wait for price to pull back. We have to be patient for price to pull back before we consider selling USD JPY. And I think USD JPY is likely going to drop to this area of liquidity, this low. Okay, let's identify the areas of liquidity on. Okay, so we have this high. These are areas of liquidity. Okay, so it is likely price will pull back to clear liquidity at this previous high, or aim for sell side liquidity. But as we know, the bias is bearish, the long-term trend is bearish, so we should be aiming for the sell side liquidity, which is this previous low. Okay, we also have liquidity at this low, so this could be our first target if we are selling USD JPY. Okay, this should be our first target, and this should be our second target. But before we sell, let's wait for the pullback. We could also trade the pullback. We could also take advantage of the pullback. Okay, so let's go down to lower time frame and see the pattern that formed on lower time frame. Let's go down to lower time frame. The next lower time frame is daily. Let's see the pattern that formed on daily on Friday. So let's go to daily. So you can see the pattern we have on the daily time frame, right? Last week candle closed strongly bearish. It closed strongly bearish on the daily time frame. USDJPY was bearish all through last week. Okay, so after the close of the bearish pattern or bearish candle on the daily time frame on Friday, let's see the pattern we have on the 4-hour time frame. Let's see the pattern on 4-hour time frame. So you can see the pattern we have on USDJPY. It's an indication that the sellers are becoming exhausted, they are getting weaker, and there's a high probability for price to shoot up. Okay, so what we have here is a bearish reversal pattern, bullish reversal pattern. This is a spinning bottom, a bearish spinning bottom. We wouldn't have jumped in and start buying after the close of a bearish spinning bottom. We have to wait for the next candle to close bullish before we buy. Now the next candle closed as a spinning bottom, bullish spinning bottom. Okay, so for me, if I'm going to buy USDJPY, I want to see price break the high of this spinning top. A 4-hour candle should close above the high of this spinning bottom. That is when I will consider buying USDJPY this coming week. Okay, I cannot sell USDJPY at the current market price. It is very risky. It is very risky. I can't. And you shouldn't sell USDJPY at the current market price. It does not make sense. When it was being sold for 1,000, or let's say when it was being sold for 500, you didn't execute your trade. You didn't execute a sell at that point. Why would you now be selling or executing a trade when the price is very expensive? You can't. This is not a good price. Okay, so that's my take on USDJPY. I want to see price pull back to a premium level before I consider selling USDJPY. I hope that is clear. So that's my take on USDJPY. Okay, let's move to the next pair. GBP/USD. Okay, Mr. Sunday says we should look at GBP/USD. Okay, let's look at GBP/USD. GBP/USD positively correlated with Euro/USD and Australian dollar/USD. So let's start with the weekly. So you see how last week candle closed. It closed strongly bullish. Okay, it closed strongly bullish. It closed above a resistance, and I think last week bullish move was to clear liquidity at these highs, these previous highs. I expected this move on GBP/USD last week. Okay, if you joined last week weekly market outlook session, or you watched the video, I told you guys that there's a high probability that they want to clear liquidity at this previous high, and that was what we saw in the market. That was what happened last week. This bullish move was to clear liquidity at this previous high, and I think they've achieved that, and there's a high probability for price to pull back. So you could see, if you go back here, we had a resistance here. Can you see this? We had a resistance here. We also had a resistance here. So you can see. So price is at that zone right now, that supply zone. And there's a high probability for price to what? To pull back. There's a high probability for price to pull back. Now, we need to be sure that a bearish reversal pattern forms at that supply zone or resistance zone. Now, on the weekly, we can't identify a bearish reversal pattern, but on the weekly, we can see that price just tested a resistance zone or a supply zone, whatever you want to call it. Okay, so we need to now go down to next lower time frame, which is daily. Now, the longer term trend, if you look at the structure we have on the weekly time frame on GBP/USD, it's a bullish structure. So the trend on the higher time frame is bullish. Okay, but before it will continue with its bullish move, after clearing liquidity, there is a high probability that it will pull back. So we are looking for opportunity to trade. We want to take advantage of the pullback. But if you are a trend trader, wait for price to pull back, okay, before you execute buy. You cannot buy GU at the current market price. They will definitely hunt for your stop loss. If you do, your stop loss will be hunted for if you execute a buy. It does not make sense to buy GU. Don't make that mistake. The only reason you want to buy GU at the current market price will be FOMO, fear of missing out. That will be the only reason you want to buy GU at the current market price. Because at this point, those who bought, who joined the trend at its early phase would want to sell now because they've made good profits. They've made good profit and they would want to sell. And if they start selling, price would drop. Price would drop. Even the institutions want to sell. Institutions want to sell because they've made so much profit. They've cleared liquidity. So they want to sell to take profits. So there's a high probability that price would drop. Price will drop. So you cannot buy. You cannot buy GU at the current market price. Okay, so let's go down to lower time frame. Why are we switching to the lower time frame? We want to identify the pattern that formed on lower time frame. Daily 4 hour. Daily 4 hour. Okay, so let's go to daily. Let's see the pattern. Okay, so you can see daily. This is not a valid shooting star. We cannot call this a shooting star. This is a bullish candlestick, a strong bullish candlestick. Okay, this is not a shooting star. So after the close of this daily candle, let's go down to 4 hour. Okay, so you can see the pattern we have on 4 hour. This is a shooting star. This bearish candle is a shooting star. It is a shooting star, indicating that the trend is going to change. There's a high probability that trend will change from bullish to bearish. Okay, that's the information we can deduce from this candle. That's the interpretation of a shooting star. Okay, so after the formation of this shooting star, now for me, this is how I trade. This is how I execute my trade. I cannot execute a sell trade at the current market price. Now, first thing I need to identify here is that a support. You can see we had a support here. Okay, we had a support here. We had a support here. Okay, so for me to sell, I would patiently wait for a candle to close below the low of this bullish candle that formed before the shooting star. That will be my entry price. A candle should close below that level before I sell. A 4 hour candle must close below that level before I sell. So that is my entry area for GBP/USD. Okay, that will be my entry zone for GBP/USD. So I'm considering selling GBP/USD. Remember, that's counter trading. I want to take advantage of the pullback. I want price to drop to a discount level before I buy. So it is possible I would buy GU this week. It is possible. I'm going to sell and I'm also likely going to buy GU this week. But before I buy GU, I want to see price pull back to a discount level before I would buy GU. But with the setup we have on daily 4 hour, and if we go to 1 hour, let's see what we have on 1 hour. So based on the pattern, you can see the pattern we have on the daily time frame. This is a bearish setup on the daily time frame. This is a bearish setup on the daily time frame, right? We have what's it called? This is a spanning top. This is an engulfing candle. This is an engulfing candle. So what we have here on 1 hour is bearish. So daily 4 hour, 1 hour is bearish. Is bearish. Okay, so I want price to drop to a discount level before I would buy GBP USD. I hope that is clear. I hope that is clear. Okay, let's look at gold. Have we looked at gold? Let's look at gold. Let's look at gold. Okay. Gold is bullish long term. Gold is at all-time high, right? Gold shocked so many people last week. Gold shocked a lot of people. I know a lot of people would have blown their accounts. Gold would have blown a lot of people's accounts, you know. Those who were looking for sell on gold. If you've been participating in the weekly session, I told you guys several weeks ago that gold is bullish until this low is broken. This low, I told you guys several weeks ago. You can see this low of this bullish candle that formed before the shooting star. You can see price has tested that level. I shared this with you guys several weeks ago. That never, don't sell gold unless this low of this bullish candle is broken. I shared this with you guys several weeks ago that gold is still very bullish, and I told you guys there's a high probability that they will clear liquidity at this previous high, which played out. Okay, so what is my expectation on gold? Gold is still bullish long term. Let's just see the monthly time frame. Okay, so you can see on monthly also they clear liquidity at this previous high. So gold is still bullish, but we cannot be buying gold at the current market price. You don't need me to tell you that it's overbought right now. We cannot buy gold at the current market price. If you buy gold at the current market price, it's very risky. You cannot buy. I can't buy gold because I know the institutions want to sell. Most retail traders want to sell. They've made so much profit and they would want to sell. If they don't close all their trade, they will close partials. Though the long-term trend is still bullish. We want to see price pull back. Before we consider buying gold. So I want to see price. My expectation is that gold will pull back to this resistance, which has become support. That is the area I would consider buying gold. So right now, if I see a bearish reversal pattern, if a bearish reversal pattern forms on gold on lower time frame, then I should look for sell opportunity. I want to take advantage of the pullback. But it's risky trading the pullback. It's risky. That's why I said when you're trading the pullback, know that you're trading pullback and you have to be very conservative. You can't go aggressive when you're trading pullback because the trend can just change anytime. Price can just turn anytime. So you should know that you're trading the pullback and you have to be very conservative. As you are making profits, you are trailing your stop. Okay, so let's go down to weekly. So weekly also strongly bullish. It closed strongly bullish. So now let's go down to 4 hour. Okay, daily. Okay, so look at the pattern we have on daily. So on the daily, we have what looks like a shooting star, but this is not a valid shooting star. Okay, this is not a valid shooting star. If we want to execute a sell trade based on this candlestick pattern we have on the daily, we have to wait for the next candle to close bearish. Okay, so if Monday candlestick closes bearish, then you should look for sell setup on gold. So if we apply Fibonacci on the daily time frame, so we'll take it from this swing low. This is the most recent swing low to the swing high. Okay, we want to see price drop to discount. Now, everything I'm sharing with you is probability, right? It's not guaranteed, but okay, it's not guaranteed it's going to pull back here. But it will not be also be wise to buy from the current market price. If you buy from the current market price, where do you want to set your stop loss? Just tell me. If you buy at the current market price, where would you set your stop loss? Where? If you set your stop loss here, they can easily hunt for it. If you set your stop loss here, they can easily hunt for it. If you set it here, they can easily hunt for it. If you set it here, they can easily hunt for it. The best place to set your stop loss will either be this low or this low. So do you want to take the risk? Calculate the risk. If you set your stop loss at this level, the risk is as high as 900 over 900 pips. 900 pips. Why would you want to take a risk of 900 pips on a trade? So it will not be wise to buy gold. I congratulate those who bought gold last week and made good profits last week. Congratulations. Okay, but right now, if you're in good profits in gold, you should consider closing partials on gold. Close partials or close all your profits. Close the profits you've made on gold. Wait for the pullback. Look for another opportunity to buy. Okay, so let's go down to the next lower time frame, which will be 4 hour. Let's go to 4 hour. Okay, so you can see the pattern we have on 4 hour. You can see all the patterns we have here. This was a spinning top. This is a shooting star. You can see this is telling us that the buyers, the bulls, are becoming weaker. They are becoming exhausted. The buying power is beginning to reduce. That's what it means when you begin to see all these weak candlestick patterns. These weak candles, these are weak candles. This tells us that the buyers are becoming weaker. So we should be looking for sell opportunities. So we have a shooting star here, okay, which is a bullish shooting star. So we need to wait for the next 4 hour candle to close, okay, preferably below the low of that shooting star. That is when we should consider selling gold. So if a 4 hour candle closes below the low of that shooting star tomorrow, you could risk selling gold. You could risk selling gold. And if you are selling gold, your stop loss should be few pips above the high of this candle, maybe 10 or 15 pips above the high of that candle, because there's liquidity at this level. So they might want to hunt for that level before they start pushing price down, because they know a lot of retail traders would have executed sell trade after the formation of this shooting star. 70 to 80% of retail traders would have executed sell. So they might want to clear liquidity at this high before pushing price down. So that's why I always advise that you should set your stop loss few pips above that obvious level, okay, that they can easily hunt for the stop losses at those levels. Okay, so that's my take on gold. I'm looking for a sell opportunity. I want to see price drop to at least equilibrium. I could consider buying at equilibrium. That is level 50. If price drops to equilibrium and there's a bullish reversal pattern forms at that level, I could risk buying. But the best area to consider buying is discount, which is below level 50. Okay, but the pattern that forms at level 50 would also determine if one could go in and buy. Okay, there are other things you need to look out for. You need to go to lower time frame, also look at the structure on the lower time frame before, maybe 15 minutes or 5 minutes before you buy. If price drops to level 50 and a bullish reversal pattern forms, we don't just jump in. We go down to lower time frame to confirm the structure on the lower time frames too. I hope that is clear. Okay, so we'll look at 2 more instruments before we end tonight's session, and that will be, someone said we should look at EJ. Which other pair? We'll look at EJ. Which other pair do you want us to look at? Okay, USD card. If GBP USD is going to go bearish this week, USD card should go bullish, but long term on USD card will be bearish. Okay, so if you're looking for buy on, for sell on GU, USD card will be bullish, because both pairs are negatively correlated. 70 to 80% of the time they move in opposite direction. And if you go to USD card, you will see that the pattern we have on USD card is the opposite of what we saw on GBP USD. Okay, so let's look at EJ. So let's start with the weekly time frame. So it's obvious that EJ is bearish. EJ is bearish at the moment. EJ is bearish. You can see the pattern. This is a bearish reversal pattern. I think price tested this previous resistance level. Okay, you can see price tested the previous resistance level, strong rejection from that level, a bearish reversal pattern formed at that level. So we should have considered selling Euro JPY after the close of this spinning top. This would have been a good entry for EJ. Okay, so now price, the market is trading at 160.79. That's about 200 pips from our entry price, where we should have entered sell. The market is now trading 200 pips below that level. Why would we want to sell from that level? Why would we want to sell from that level? Okay, so we cannot take a sell on Euro JPY, but the long-term trend is what's bearish. So before we sell, we want to see price pull back. We have to be patient for price to pull back. If you're a trend trader, you want to wait for the pullback to play out before you sell. You could also take advantage of the pullback. I would be taking advantage of the pullback by going down to lower time frame to identify the pattern on lower time frame. Okay, so let's apply our vertical line on last week candle. Okay, so let's go down to daily. So on daily, see what we have on daily. This is a bearish pattern. Okay, this is a bearish pattern. Structure, there was break of structure. You can see, can you see that there was break of structure at this point? At this point, okay, there was break of structure at this point. So the structure we have on the daily is a bearish structure. Okay, so right after the break of structure, we want to see price pull back. Okay, we want to see price pull back. As you know, when there's a breakout from a support, there's a high probability that price will pull back to that support. Okay, so we want to see price at least pull back to this support level, this broken support level. Okay, that would be a good area, a good level to consider selling. You cannot sell at the current market price unless you are comfortable with that risk, 200 pip risk. If you are comfortable with that, fine, you can go ahead and sell. You can go ahead and what? Sell, but I don't take such risk. I ensure that the risk on any trade I execute does not exceed maximum 40 pips. Maximum 40 pips. Okay, so I want to see price pull back on EJ to the broken support, which has become a resistance, before I sell. Or we could go down to lower time frame to identify a fair value gap after the breakout. Let's go to 4 hour. Let's see what we have on 4 hour. So on 4 hour, I think a fair value gap was created. You can see a fair value gap was created. You can see, and that gap has not been filled. That gap has not been filled. So I want to see price fill that gap before I sell. Okay, I want to see price pull back, fill that gap before I sell. Now there's a high probability that they will likely push price below this low. Okay, these lows. Okay, they are likely going to push price below this low before aiming for this fair value gap, because there are a lot of liquidity at this level. A lot of retail traders would have executed buy, and their stop losses will be at this level. Their stop losses will be at this level. So there's a high probability that they will first push price below these lows before aiming for this fair value gap. So that's my take on Euro JPY. You either wait for price to pull back before you sell, or you take advantage of the pullback. Okay, make some profits. Okay, as price pulls back to the previous support, stone resistance, or the fair value gap. Okay, so I hope that is clear. I hope you're following. So that's my take on EJ. The same thing can be applied on GJ. It's the same pattern. If we go to GJ, it's the same pattern. Let's just look at the chart on GJ. It's the same pattern. Let's see. Can you see the pattern? Similar to what we had on what's it called? On EJ. Okay, so it's the same pattern. We want to see price pull back to a support stone, resistance. Okay, probably this level before we consider selling on GJ. Okay, we want to see price pull back to that level before we consider, okay, selling GJ. We cannot sell GJ at the current market price. I hope that is clear. I hope that is clear. Any question? Any question? That will be all for tonight's session. That will be all for tonight's session. Do you have any question? See, I'm sweating. I had to close all the windows because of the noise. I had to close the windows because of the noise. Okay. Someone says we should look at USD card. Okay, so let's just look at USD card before we end this session. Okay, let's look at USD card. USD card. So you can see the pattern we have on USD card. So let's start with the weekly. So from the weekly, we can tell long term on USD card is bearish, right? Is bearish, reason being that price tested. Thank you, Mr. Coyote. Thank you. Today is my birthday. Thank you, Mr. Coyote. Thank you. So, so on the weekly time frame, you can see this is the previous resistance. Price tested that resistance level. The reason for this bullish move was to clear liquidity at this previous high. Okay, that was the reason for this bullish move, and that they have achieved. Okay, so last week candle closed bearish after clearing liquidity and testing this previous resistance. Okay, so we are expecting there's a high probability that USD card is going to drop to this level. This is the next area of liquidity. Okay, these are the next areas of liquidity. If you are selling USD card, this should be your target. First TP, second TP. Okay, so now let's go down to the next lower time frame, which is daily. We want to ensure that we want to look out for a bearish reversal pattern. We want to identify a bearish reversal pattern on the daily time frame. So let's see what pattern we have on daily. So you can see the pattern we have on daily. This is an engulfing pattern. This is an engulfing pattern on the daily time frame, which confirms change in trend from bullish to bearish. Okay, now after the close of the, what's it called, the engulfing candle, after the close of this engulfing candle, a fair value gap was created. So we want to see price pull back and fill this gap. You can see, so we want to see price pull back and fill this gap before we sell USD card. Please wait for price to fill this gap. As you can see on the daily time frame, price just tested a support zone. Can you see that? Can you see the reason for the rejection? Price is what? Is at a support zone. Can you see that? On the daily time frame. So price is likely going to pull back to fill this fair value gap before it drops. Okay, so after the close of Friday candle, this looks like an hammer, but not a valid hammer. It looks like an hammer. Okay, so let's assume what we have on the chart is just daily. Okay, the time frame, let's just assume it starts from daily, right? We're not looking at the weekly. Let's just assume the weekly time frame does not exist on the platform. We're working with the daily. So on the daily, we have what looks like hammer. Okay, so let's go down to 4 hour. If we can identify a bullish reversal pattern on 4 hour, then we should look for buy, okay, on USD card. So let's go down to 4 hour. So you can see the pattern we have on 4 hour. This is an engulfing pattern too, right? This is an engulfing pattern after several formation of spinning bottom. Okay, we had a spinning bottom here, spinning bottom here. This now engulfed. This candle engulfed 1, 2, 3, 4 bearish candle. Just this candle engulfed 4 bearish candle. So this is an engulfing pattern. Okay, now before we buy, it's possible price will pull back. Okay, it is possible price will pull back. Let's see, after this engulfing candle, After this engulfing candle on 4 hour, let's go down to 15 minutes. Okay, let's go to 1 hour first before we go to 15 minutes. Okay, so let's go to 15 minutes. So on 15 minutes, can we find a fair value gap on 15 minutes? Okay, we had a fair value gap here, though that gap has been filled. There was a fair value gap that was created at this point. That gap has been filled. So it is likely price is likely going to pull back again to fill this gap. So that's my expectation on USD CAD. We should wait for price to pull back to this area before we consider buying. Okay, as you can see, the pattern we have here is a bearish reversal pattern on 15 minutes. So this is likely going to play out, okay, on 15 minutes, 1 minute, and 5 minutes. This pattern is likely going to play out before the higher time frame pattern will play out. Okay, so we want to see price pull back to this zone before we buy USD CAD. So that will be all for tonight's session. I appreciate you all for your participation. Okay, our next session will be on Tuesday by 10 a.m. If you are not on the WhatsApp group, please send me a message on WhatsApp so that I can add you to the WhatsApp group. And if this is your first time participating in the live stream, please subscribe to the channel so that anytime I come online or anytime I drop a video, YouTube will notify you. Ensure you subscribe to the channel. And if you really got value from this session, please give us a thumbs up, like the stream. If you got value from this session, give us a thumbs up. I appreciate you all, and I wish you all a profitable trading week. Please, as you trade this week, like I said, we are expecting several major news from the United States. So this week will be very volatile. This week will be very volatile, and you want to ensure that you apply proper risk and money management on every trade you execute. Always use stop loss. If you're still trading Forex and you're not using stop loss, trust me, you will keep losing money. You will keep losing money. Determine how much you want to lose on the trade before you execute it. Know the dollar amount and ensure that you don't adjust your stop loss when the market is approaching your stop loss. These are some of the silly mistakes I made when I started trading Forex. Don't make those same mistakes. Once you set your stop loss and the market is approaching that level, let it hit your stop loss. Don't adjust your stop loss. Please don't. Set your targets before you execute the trade. Your stop loss and your take profit. Set it. Once you've executed the trade, the next thing is to manage the trade. The next thing is to manage the trade. As the market is going in your direction, minimize your risk on the trade. Trail your stops. That is all you do after executing a trade. You are not adjusting your stop loss. You are not adjusting your take profit. It is either the market hits your take profit or it hits your stop loss. The only thing you do is manage it. Market is moving in your direction. You are reducing your risk. Now, before you start trailing your stop, you don't just trail your stop because you're in profit. Don't do that. You don't just trail your stop because you are in profit. Before you trail your stop, you should ensure that the profits you have made is equal to the initial risk you took on that trade. So if the initial risk you took on the trade is 40 pips, you should have made a profit of 40 pips before you start thinking of minimizing your risk on that trade. Most people, what they do is that immediately they see profits 10 pips, they adjust their stop loss to break even. Before you know it, price will reverse and hit their stop loss. You need to understand the state of the market. You need to know the nature of the market. In a volatile market, you cannot be using 10 pips, 20 pips as stop loss. In a volatile market. So if you know that the market is very volatile, like this week will be very volatile. You cannot be using 20, 30 pips as your stop loss. They will keep hunting for your stop loss. I hope you're following. I hope you're getting the message. Before you start trailing stop, ensure that the profits you have made is equal to the risk. That is when you can adjust to break even. I hope that is clear. Please be conservative. Be conservative. Be conservative. Your focus should be on preserving your capital. Okay, you're focused. The first goal you should aim for is capital preservation in trading. Capital preservation, that should be your utmost priority. If you can preserve your capital, you will definitely make profits in the long run. Don't take unnecessary risk. Please don't take unnecessary risk in this market. If you are a risk taker, if you think you are a risk taker, you are a high risk taker, the market will teach you a lesson, a very hard lesson. Okay, so please take it easy on the market. The market is not a Ponzi platform that will crash tomorrow. Take it easy with the market. If you rush the market, you will crash. I speak from experience, over 10 years trading experience. If you rush the market, you will crash. You will crash. So please take it easy. Take it easy. Take it easy. Thank you very much, guys. Thank you very much. Let's go enjoy the rest of the day with our family. So see you guys on Tuesday. Good night.